All right, traders, welcome to it. Welcome to it. Stock market movers, where we go into all the headlines that you guys need to know, and of course, get to our two expert opinions on the day. That's really what it's all about, is getting to the experts, and of course, giving you guys the headlines to go ahead and cover. So first things first, hit me up with a thumbs on up if you guys are ready for the markets. Let's go ahead, dive on in here with, of course, Money Mitch. Let's do this.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now, we all know the bull market is here to stay. Money Mitch.
All right, traders, let me know in the chat if you guys are ready to talk about the markets. Let me know if there's a catalyst that's catching your eyes. I'm going to go ahead and dive on into what we're going to talk about today. We got a lot to talk about. We're going to talk about, of course, the bear market. Is it bottoming? Of course, that's a question that everybody's asking right now. Energy catching a bounce today. I'm not going to be too mad about that. Made a nice gain there. Ratings up today. We'll talk a little about some rating travel stocks, biotech, home sales, inflation, and recession. We got a lot to go into today. So I'm going to go ahead and just dive on in. One thing I do want to do is, of course, mention who our guest is going to be on for today. So there you guys see the topics down below. I'll go ahead and I'll always tell you, do me the favor, smash the share button right now below. Let everybody know Stock Market Movers is on, and we got some great guests coming on later today. We got Sam Stovall, the Chief Investment Strategist at CFRA Research. We got Adam Johnson, Portfolio Manager at Advisor Investment American Ingenuity Strategy. You guys, these are some of the greats, and definitely the way I'll refer to them as greats is because I see them on everywhere. We're not just talking about one network. They're on everywhere. Everyone wants to get the expert opinions from these analysts. So we'll talk a little bit about that. Like always, hit the thumbs on up. Let's dive into today's topics and get right into it. So first thing we want to talk about is, of course, Russia default on its international bonds for the first time in more than a century. The White House said sweeping sanctions have effectively cut the country off from the global financial system. The payment in question here was a $100 million in interest with two bonds, one denominated in US dollars and another in euro. The Russia was due to actually pay in May 27th. The payments actually had a grace period for 30 days, which expired on Sunday. And in a call with reporters, Kremlin spokesman Dmitry Peskov said that the fact that the payments had been blocked by the Euroclear because of Western sanctions on Russia was not our problem. Something definitely to keep on watching is what comes out of this and the Russian default. We'll keep watch to see what happens, but that's it for Russian news today. Let's get into the next topic. We're going to talk about, has the market bottomed or not? Let's take a look at the overall market and see the action that we're getting right now in the intraday. And then, of course, we'll take a deeper dive into the daily. Let's go ahead. Here's the SPY here. I'll go ahead and put it full screen so that we can take a look here. And you can see how we've come down here from the pre-market kind of levels where we were up there towards 392. Now we're trading at 388, but still significantly high from where we were, right? We talked about how this reading on the RSI down there towards 2396 on the daily level could give us a little bit of a bounce. You guys can see we've had that bounce now. We actually filled in this gap zone that we were looking at. So now that's already been filled. So we're going to go ahead and delete that now. Now the next level to watch is I'm looking for a trend line push into these levels where last time we rejected 450, then eventually rejected getting above the 416. Now I could see us coming into a little bit more play here. Maybe we draw it a little bit closer down here, coming into somewhere close towards that 400 and 405 range. That's where I'm going to be looking for us to kind of hang out below. We could get back towards that 405. Let's see if we get back towards that in the next couple of days. And then we can start questioning the market bottom or not. One of the things that I always look at if the market is bottoming, of course, we want to see an overall rally come on back. So paying attention to market breadth data, I think is definitely important. Another thing to do is to try not to be the hero, right? Really want to see the overall market moving in a direction. One thing that is pointing at least towards potentially a bottom is the closer number, the SMA 50. This is now 24.4% of stocks are above the SMA 50. And then if you take a look at the SMA 200, only 15.3. The SMA 200 had gotten as close to as 13%. So I'm watching that to see if we get into the 10% stage. But also the SMA 50 had gone as low as 11% of stocks were only into the green. So I'm going to see if that one can come back down. A level that I want to see it come up on the upside is, of course, the 40% mark. Once we can get that 40% of stocks above their SMA 50, I'll definitely be changing my tunes into more of a bullish mood. Let's catch up with the chat. What's going on out there? It looks like we got 73 people joining us right now. We want to get some more people in here. So please, thumbs on up for the Chick-fil-A sauce. Only the sauce. Let's keep it going. Chase, Bourne, I see you guys in the chat. Sean, it's good to see you guys here. Appreciate you guys hanging out. Blind Trader, Born to be Free. Let's get it. Let's take a look at what we got going on in the markets. All right, let's get out of the market bottom or not. Let's take a look here at the overall charts and what's hot and what's not. I think it's important definitely to always keep this on our radar as we see energy stocks getting a bounce after about 2 weeks of decline. Not a bad trade there today. Let's go ahead. Let's take a look at some of those names. All right, so if we take a look here, of course, we're going to go ahead and I'll pull up MRO here. Marathon definitely getting a nice ride on up here today. Breakout right out the gates, about 4.7%. Now holding its upper range there, not looking too bad, but it wasn't only MRO. Of course, we could take a look at some other names in oil. We could take a look here at Valero or Devon. Valero is VLO, so you guys can check this one out. Look how this one's holding the gains here, up now over 5%, so definitely a good day there. And just to kind of take a look at DVN, you guys can also see some strength there. I personally played this with playing the daily vehicle of Gush. Got in there around the 134, selling up there when this started turning around the 142. So I'm completely out of this trade, but watching it to see if it can continue. And I do think that, we've had some great pullbacks in oil, so you can be watching them probably for some short momentum towards the upside. We'll talk all about that coming up with our expert interviews. Let's go ahead. Let's get out of oil. We'll see if this can continue making gains here. You can take a look at the overall sector index that I use here, and we'll take a look to see if this can really start coming back after about 2 weeks of decline action there. Some other names that you guys can watch, of course, we can take a look here at some high cap names. ExxonMobil getting a little bit of a bounce. Chevron getting a little bit of a bounce there. Of course, also Conoco, Phillips. We'll see if this can get on back there. Of course, after weeks of decline, I think a lot of investors are looking to see if we can get this pushing back. Was it a more correction or was it a pullback opportunity? We'll keep looking into it. All right, let's keep going. Let's go towards the next subject of today. We're going to get out of the energy stocks, and wouldn't you know it, travel stocks getting hit again after, selling the rips has been kind of working lately, but especially here in the travel stocks. Let's go ahead. Let's take a look at how these travel stocks are performing on the day. Carnival Cruise Line pulling on back there, but it doesn't look too bad of a pullback at least. If it can hold kind of that 50% retracement, kind of hold sideways here, it doesn't look the worst, but definitely a pullback today on Carnival after a big push up. You guys can also see it in RCL pulling on back there, but it's not only the cruise lines. Take a look at the airlines pulling back a little bit today. You can take a look at Hilton. Hilton did make a little push on up, but still just barely into the red there. We'll see how that kind of performs right now. I know Airbnb was pushing also on Friday, and you can see it retracing some of those gains. So we'll see if kind of these traveling stocks can continue going. Of course, this came on the heels of Carnival's best demand since the pandemic. And you could see when that earnings came out, a lot of these started coming on up, but it looks like a lot of them selling the rip now. We'll see if it can continue going into the week. All right, let's get out of the travel stocks. We did get durable good orders to come on in. I think it's important to keep on watch what's going on with the new orders for the U.S. Another thing to kind of keep on watch is that you saw an increase solidly into May, pointing that sustained strength in business spending on equipment in the second quarter. We could see here durable goods month over month in May at 0.7% versus a 0.1 estimate. Prior was at 0.5. One thing to keep on watch is the core's capital good orders increased by 0.5. If you take a look here, we definitely got a prior reading at the 0.4 there on the core durable goods. Another area to watch is, of course, the durable goods orders just gained about 0.7. Shipments were up about 1.3. So definitely we're seeing kind of that strength there, sustained strength in the business spending right now. So not seeing a slowdown there, at least in this month's reading. Let's continue on into the ratings. Ratings were really hot lately as we're getting more and more ratings that come on out. As you guys can see today, we got some ratings. Let's go to the first one here on Coinbase getting on up there, and you guys can see it kind of gave up those gains that it got on that ratings. But let's take a look there. Goldman Sachs downgrading Coinbase here, global to sell, lowering the price target of 45. What I had to say about that one was, I wonder where Goldman Sachs price target was when Coin first started. I don't think it was at 45. So we'll take a look at that. Definitely this stock was bouncing back there. We'll see if it can hold the double bottom as they're putting a 45, and that would definitely take it right back below, kind of trying to take out the lows there of May 12th. So the low there is 40.83. We'll see if it gets taken out, of course, on this downgrade. Let's go to the upgrade here on Robinhood. I wonder how the hood's trading today. Let's take a look. Looks like we're trading up right now. Got up there towards the 838s, trying to fight some resistance up here at the 840s. We'll see if it can close above those 840s right now. But Goldman Sachs upgrading Robinhood markets to neutral, but they did lower their price target to 950. And so that's not the biggest move on up here. We'll point it out. It's right around here. We'll see if it can get back onto this prior support, maybe get into this gap zone here, fill some of this shadow up there towards $9 on Hood. All right, like always, we're going to keep on watch the headlines. That's really what this show's all about. It's trying to keep you guys in the informational edge. I covered through all the headlines and, of course, get into the expert opinions. That's what we really want to do, is get to our expert interviews. Like always, this is not for financial advice, guys. This is for educational purposes only. But the idea here is that I can go ahead and kind of look at what's moving, maybe point a sign somewhere. But, of course, we want to get to the experts so that you guys can keep in that informational edge. So smash the thumbs on up if you guys appreciate us getting to 2 interviews today on Stock Market Movers like we always do, and definitely smash the like on up. We're going to go ahead and play a quick trailer and get into our first interview today. We got Sam Stovall, the Chief Investment Strategist at CFRA Research. I'm super excited to have him on. I'm telling you, today we have a lineup of all-stars. Super excited with Sam and Adam. These are the guys that we always want to get to. If you look around and you'll see that these are the opinions that everyone's trying to listen to. And like always, what this does is just try to keep us in the informational edge. So let's go ahead and dive right on in.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, let's go ahead. Let's bring on Sam here. Sam Stovall, the Chief Investment Strategist of CFRA Research. Welcome to the show and glad to have you back.
Thanks. Happy to be here.
Definitely. Now, of course, what this show is really all about is trying to get to the experts. And of course, like I mentioned before, this isn't financial advice for educational purposes, but let's dive on in. First question I want to ask about, is the bottom in, or are we just in kind of a relief rally? What do you see, Sam?
I think that we're in a relief rally because, like you and like the people who are watching, I'm really just trying to learn from what the market is telling me. And what I have found is that traditionally, when we do end up seeing the market sell off, especially if we have very, very little participation to the upside, through the most recent low, none of the 150 industries in the S&P 1500 were above their 10-week or 50-day moving average. And that is usually only seen toward the end of declines of 15% or more, going back to 1990. So it tells us that we're probably near a low, but a lot of times we bounce along the bottom before the actual low is put in place. And we have yet to have a true capitulation, in my opinion.
Definitely a good number to keep on watch. I've heard you mention that 10-week multiple times, something that I'm definitely keeping an eye out. I'll already cross out a question that I had on market breadth and strength in certain industries, but you guys can see there, Sam already answering that. Let's talk about what there is to watch this week for further developments. What should we keep our eyes on open to?
Well, I think this is going to be sort of a limbo week as well as next week, because it is surrounded by the 4th of July holiday. So we will have probably less volume, fewer traders that are actually involved. And I think what's really going on is investors are wondering what is going to happen to second quarter earnings as well as second, third, fourth quarter guidance, because usually in a recession, we tend to see earnings come down. We really haven't seen that yet. 2022 earnings are expected to be up 8.8%. Next year, it's supposed to be up 9.3%. We have seen a little bit of downside revision for the second quarter. So I think we have to wait to see what the second quarter indeed brings, as well as what the forward guidance might be, because we traditionally see a 1/3 trimming of the PE ratio during bear markets associated with recessions. And right now that has not happened.
Perfect. It's exactly what I was going to be pointing to in my next question about revisions on earnings, because I think that's definitely the next signal to show us what inning we're really in the bear market, right? Is this kind of early and we're seeing the swing already, or do we continue to see some earnings outlook, especially on the overall market, to see that kind of getting hit towards the downside? But what do you need to see, Sam, for you to call the bear markets over?
Well, I monitor my own level of capitulation. It's very simple. I just download daily intraday prices. You can get that for free online. So intraday high versus the intraday low, whatever that percentage is. And then I plot out a rolling 15-day. And what you'll find, very interestingly, is a very sharp spike, like a stalagmite that breaks above 2 standard deviations from the mean. Basically, you can tell it's like a very sharp upward heartbeat. And usually once we get that elevated peak and then it starts to come down, we are very close to that sell-off bottom. So once, in a sense, investors have said, I've had enough, I don't want this anymore, let me sell everything, even if it is a good quality stock, that's usually the time to go in and start to pick up what's left.
Now, one area that I'm keeping on watch, of course, is retail and seeing if there is that demand destruction. Do you see any demand destruction out there, Sam? And is it on your radar?
Well, it is certainly a concern. I mean, every time since World War II that we have seen 6.5% rise in headline CPI, we have slipped into a bear market and a recession. I mean, right now, expectations are maybe we won't go into recession. That's what ours and many other economists are saying. But I think that they're early yet. Typically, inverted yield curves happen about 14 months before the recession starts. So I really think the jury is out, but higher prices are likely to affect demand for consumer discretionary items. whether it be home building, autos, retail, etc.
Now, one of the things that I'll be talking about a little bit later is, of course, home sales and the numbers that we got today. But how do you see the housing market right now, Sam? Do you see there's signs of concern out there?
Well, signs of concerns come from the mortgage rates. Essentially, that yes, we still have pretty low supply, so that's why prices remain fairly elevated. But if you do look, today we got the pending home sales at 99.9, which was a little better than anticipated. And then we're also going to be getting the S&P Case-Shiller Home Price Index tomorrow, and that's expected to show a slight increase. So prices are still on the ascent, but that has more to do, in my opinion, of the limited supply. But I think that the people just starting out are being squeezed from being able to buy a home because it costs so much to get a mortgage.
And of course, I got to ask the last question here about inflation. And do we see some peaking? I know that we had energy pullback and some people were starting to mention that. What do you think here, Sam?
Yes, I do. I mean, look, granted, we made a mistake. We thought March was going to be the peak at 8.5% on a year-on-year headline CPI. And then 2 months later, no, 8.6% was the high. But we do see inflation coming down very, very gradually. We think it's going to average 7% in the final quarter of this year and then start to slide dramatically as we move into 2023. So right now, our belief is that inflation has peaked, but obviously we'll have to wait and see.
Well, I just wanted to tell you thank you definitely for coming back on, Sam, and we got to have you on more often. This is the Chief Investment Strategist at CFRA Research. And like always, guys, don't only check him out here, check him out also on Twitter. I'll make sure that you guys have that in the description and give Sam a follow. Thank you for coming on, Sam.
Oh, my pleasure. Thanks for having me.
All right, that's what it's all about. There you go. Our first interview is done. You guys check out Sam Stovall, but one of the things that I say is definitely keep your eyes open right now because there's a lot going on, right? It's not like we have one, over our head macro economy kind of topic right now. There's a lot, right? We got inflation, recession, what's going to continue to happen with the earnings. That's why I really wanted to touch that. You can see that's really on Sam's eye, and I think that's something that we all need to keep watch. Are we going to get further revisions to the downside? That could be a signal that the bear market could continue going in that direction, but it's something just to keep on watch. We'll see what happens. All right, let's go ahead. Let's get into some more headlines. That's what the show's about. We're going to keep going laser-like focus here as we keep going into some other ratings here. We got next one up we want to talk about is, of course, let's go into Etsy today. Etsy making a nice lift up. So let's go ahead. Let's bring up the chart here. Taking a little lift. It did pull back a little bit, but let's talk a little bit about this. So in the pre-market, it was up here. And let's talk about their downgrade here. They pulling on back here. Look at that nice little pullback here. We'll see if it can hold that 79. You can see I bottomed there multiple times here. But Etsy shares are dropping as Needham downgrades the stock, citing near-term risk. Needham analyst Anna views the discretionary nature of Etsy's model as an increasing risk in the near term. So demand destruction, I think, is really what she's more along pointing to. And you could see it on the daily chart. But the question is, did we pull back far enough here on Etsy's valuation to kind of find where the earnings kind of meet the price? Right now, it's up at 80. I think this one could get a little bit lower, but definitely one of the things that I'd see is just the fighting trend of the red months. Until this kind of changes here, I would be worried about the stock price. And that's what I always say a lot of the times. Like, one of the things that I like to always keep on watch is the monthly charts. And if the monthly charts are just showing me red, a lot of my signals are to wait until you get 1 month of green. Then you can look for maybe possible a pullback entry. But for right now, Etsy, in my eyes, also continuing to point towards the downside. All right, guys, we're going to get into the stocks that you guys want to check. I know that you guys want to check EVFM and also AMC. We'll talk a little bit about those coming on up, but just want to make sure that we get through the headlines and then we can take stocks from the chat. All right, let's get towards the next headline. After we get out of Etsy, we can go into bio and tech here as we go ahead and check out the look here. BNTX here is where you guys want to be checking on out. Let's go ahead. Let's take a look here as the stock is trading on up. Doesn't look too bad here. Biotech shares are trading higher after the company announced its Omicron adapted COVID-19 vaccine candidate demonstrated high immune response against the Omicron variant. So definitely keep on watch, guys. We'll see what happens here. You're seeing biotech have a big push lately. I mean, I'm going to show you guys the sector overall or the industry overall. We can go into healthcare, then we go into biotechs, and you can see here on the daily, strong move as of late. This is the sector overall. So keep these on watch. Stocks like NVO, AMGN, Gilead Science. These stocks have been really strong as of late. We know we've been watching Moderna, but we'll see if these can continue to make lifts as we're seeing that biotech really get strong lately. And definitely BNTX, not a bad day there, back there towards 142. We'll see if it closes above 145 and really starts getting out of this kind of bearish trend that we've been stuck in. And definitely seeing a little bit of lift there as traders trading higher after Omicron adapted vaccine results there. We'll see what happens here. Definitely got to watch to see if healthcare really continues strong, but let's move forward. All right, up next, we're going into pending home sales here as the measure of signed contracts on existing homes rose slightly in May, up 0.7 compared with April. According to the National Association of Retailers, that finally broke here the 6-month streak of declining action and demand as sales were still 13% lower in May in 2021. But let's take a look at the housing market and see what we're seeing right now. We talked a little bit about it there with Sam. But let's take a look here at stocks like Lennar that were doing really well after their earnings report. And another one that was doing well recently was also DHI. We also saw Toll Brothers kind of make a lift here. We're going to continue to watch real estate to see if it can continue pushing. Of course, this is residential construction. So let's take a look at the industry. And you can see here, we've kind of bottomed there. We'll see if this can continue pushing. One thing to keep on watch, though, of course, is how the Fed continues to either raise interest rate hike rates, or does we start getting questions on if inflation's topping. Do you see the Fed kind of turning there? I think that's something definitely to keep on watch. We'll see what happens with these stocks if they can continue to making lifts. Right now, it's going on sideways, still green on the day here, but definitely showing a little bit of slowdown, but we'll see. As long as it can keep holding the trend, it looks good right now. So I would want it to keep holding and maybe making a move to 73. Doesn't look too bad on some of these housing names. All right, definitely, healthcare and biotech, IBB, lots of growth. Yeah, there's a lot there. So keep this on watch. I always like to mention different industries and sectors to keep on watch, because that's what I like to do, is definitely keep your eyes on the rotation so that you don't miss out on a big move. All right, let's continue here. Let's go into our cryptocurrency news, guys. So let's go ahead. Let's touch a little bit about that. We can get into the cryptocurrency news right now. Three Arrows Capital, a crypto-focused hedge fund, has to meet a deadline here, and it's not the deadline that we all like to get, maybe some good results. This actually is on Monday to repay more than $670 million in loan or face default. So Three Arrows Capital, we'll see what happens here. But Three Arrows Capital, also known as one of the most prominent crypto hedge funds around, is known also for its highly leveraged bets. But Voyager Digital stepping in here and trying to help out. Digital asset brokerage said last week that it lent Three Arrows Capital 15,250 Bitcoin there, and also 350 million of the stable coin USDC at Monday's price. The total loan equates to more than 675 million. We're going to see if they're able to go ahead and pay. The outstanding loan was due on July 27th, Monday. So keep on watch to see what happens in the crypto environment. But it's not only the only stock to watch. Also, don't know if you guys caught today, we did have MSTR on earlier. So catch that interview if you guys want to know a little bit about the future of Bitcoin. That was on earlier today. So, definitely check stock market movers up. But if you guys want to check a little bit of the Bitcoin action on out there, the future of Bitcoin MicroStrategy, we had a great interview earlier today with CEO Michael Saylor. It was I and Chris Ketchy. So definitely check that on out. We'll see what happens in cryptocurrency and to see if Bitcoin can find the bounce there. All right, let's keep going. Let's go into some other sections. In a few minutes, we'll be getting into Adam Johnson, portfolio manager at Advisors Investment, American Ingenuity Strategy. I'm excited to have AJ on. If you guys haven't seen him before, he's on all the major platforms. So we're going to get to our all-star panel today. Definitely getting to some great interviews. Let's go ahead and let's take a look at what you guys wanted to check out. So I did see mentions in the chat there. So let's go ahead. Let's take a look here. EVFM. Let's go ahead. Let's dive on in. All right, so EVFM getting that nice rise in pre-market. You can see here, nice flagging pattern coming on down here and then breaking on out. I love this pattern here. Another thing to kind of watch, and I talk about it all the time, is about 3 to 4 bottoming actions here. You can see here 1, 2, 3, and then we come right here on the next candle trying to take out that low. It doesn't take out that low. That's when I'd look for the reversal back towards the upside. Was not a bad move there. But let's touch on why this stock moved. I'll go ahead and I'll pull up Benzinga Pro because that's the easiest way to get the news. If you guys don't have Benzinga Pro, check it on out. pro.benzinga.com and get your 2-week free trial. All right, going ahead and trying to get the news feed here. Let me see if there's any news here on EVFM here. Looks like it's trading higher after the Supreme Court overturning Roe versus v. Wade. We're going to see what happens there. Definitely a lot to focus as this company manufactures the female contraceptive Felix or Felixi. It's PHEXXI. Not sure exactly how to pronounce that, but hey, we'll give you guys the news, and that's why it's making nice leaps on up. Got above $1, but we know how these $1 stocks like to make that move, and then eventually sometimes it gives it on back. I'd point towards a daily chart. You can see this stock hasn't really come back out of the trend. It's always been in a downtrend, at least in my eyes, and so for me, it's hands off, but it's always what you guys want to go ahead and trade. Let's go to AMC here. AMC getting a nice pop. I talked about how I wasn't going to pay attention to AMC unless we got what? Back out of this bear triangle. You see, it was kind of in a bearish pennant here. Now we're starting to see closes up towards 14. Really want to see it through 15.15. Then we can look to take out 16. I'm going to keep this one on watch. It is getting a nice raise. But is this kind of a push or a short squeeze? I could see this as more being a short squeeze, but I don't see if there was any catalyst. So I'm going to take a quick look on AMC to see if I got something here. And it looks like there is something that we're getting out here. So I'm going to go ahead and bring this on up here. AMC shares are trading higher. Of course, you would have got this with Benzinga Pro. Strength is possibly due to social media mentions of the stock, as well as theater sector optimism following the performance of Top Gun Maverick, which crossed $1 billion at the box office. So some strength in the numbers, some strength in the box office, and definitely some strength in AMC today. What do we got? A move about 11%. Let's take a look at GME to see if it's pushing in the same direction. And what do you see? I'm for the first time in a long time seeing GME down big, but at the same time, AMC up big. Looks like the correlation's starting to separate there. I think it's important to watch correlation relationships. Right now, we're starting to see that separation happen between AMC and GME. I wonder if this is a bonus to AMC or if it's better for GME to kind of separate. You guys in the chat, let me know what you guys think about the situation that's going on right now. All right, let's go ahead. Let's take a look here at the other looks. If you guys got a stock you guys want to take a look at, AFIB, also breaking out. I'll take a look there. Yeah, a lot of these medical device healthcare sector is hot right now, guys. It's trying to make a move above $1 and hold. You can see how this one held above $1 and is holding the pullback at $1. And that's what I like here, as we just got a nice little recent push. This looks good on the 15-minute. I'd use a 15-minute chart for this, but like always, you guys make your own investment decisions here. But this does look good here. As you're seeing that hold of that $1, you just got to push. I would look for pullbacks towards around 108 or 106, risking off that one, but it's always up to you to determine your own attack. And I hope you guys enjoy the move. Chase talking about J&J. All right, J&J still holding the gains there. We'll see if this can continue making moves on up. Look at the daily chart on this one. Definitely came on back and coming on with a vengeance. About 8% move in the last, 4 days. Not looking too bad there. All right, let's go ahead. Let's take a look at some other stocks that you guys can watch. Definitely going to go ahead and sorry about that, guys. When the dogs go barking, the dogs go barking. All right, guys, I'm going to go ahead and play a trailer, find out why my dog's barking and crazy, and I'll be right back. Like always, guys, smash the like. Let's keep it going.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, traders, I'm back. Let's keep it going. And it looks like my dogs might be a little bit barking, but that's because they want the market to move. But hey, that's all I can do. I'm going to keep on going here. We're seeing the pullback here on the SPY. Let's take a look at the overall sectors and see what else is moving with energy today. We talked about energy earlier today. We talked about travel pullback. Look at the utilities bouncing back today. Not looking too bad there in Duke. You could take a look at Duke. Also, you could take a look at Southern Company. Excel is another one that I like. EXL bouncing back today, as we definitely saw the sell-off in 2 weeks. And look how this is coming on back. Utilities kind of leading us a little bit here. 4 days of good positive action there in Excel Energy. So something definitely to keep on watch. All right, guys, I'm going to go ahead and keep trying to do the show here. I know that you probably hear a dog barking in the background. I'm sorry about that. Just want to apologize. Looks like definitely Nala not happy out here. Let's keep going. Let's take a look at what else is moving on out there. Just give me 1 second, guys. I got to go check out what's going on here. Let me go ahead and take care of that. All right, guys, it looks like I have some visitors here. So looks like we're going to have to wrap up a little bit early. I do have Adam Johnson joining us in about 5 minutes. So just give me a quick second. Let me see if I can handle this. I know that just had to have someone visit right now. And you know how that goes, guys. Trying to keep the show going here. That's what matters. Just give me a couple seconds, guys. I'm going to do my best to get us going here on this interview. All right, traders, I'm back. I'm trying to deal with the dogs, but you know how it is. We're gonna keep going here. When the dogs go barking, so does the market usually. So who knows what will happen here? Let's keep it going. You guys can see we're getting a little bit of that utilities coming on back into play here. I'm going to keep watch also financial services. I think that's something to keep watch because they did get a nice little push last week, but definitely pulling back today. Of course, what is leading us on the downside right now is actually consumer cyclical from the open and technology slightly behind it. So it's not like one is really standing out there. But what is getting hit the most right now? It's luxury goods and gambling in that consumer cyclical. After we saw stocks like DKNG making some good rise last week, you could see they're pulling back a little bit today. We'll see what happens with these gambling plays. Of course, also Penn kind of joining it. But look at this one. Penn actually kind of holding up here. Not looking too bad there. Almost unchanged on the day. We'll keep on watch. Other casinos, though, pulling back today. MGM, LVS. So keep these on watch. We'll see what happens if there's any specific kind of relative weakness to kind of mention there. Signet also coming on down there. Luxury goods. Of course, this could be more of an outlook, but keep these on your radar. Movado Group also coming on down there today. They've been declining for a while. I have a big support underneath it here for Movado. We'll see what happens there as it's coming back a little bit today. But some other names in the industry definitely dragging it down, like SIG and in Tapestry. You can see here down about 2.79%. Luxury goods not doing the best. All right, let's go ahead. Let's get into it with our next interview. Let me know in the chat first, guys, if you guys are excited to get into our next interview. Throw the likes on up and let's go ahead. Let's dive right in it here. I'm going to bring on my next guest. He's been on Money Mitch before, but I'll tell you what, it's been too long. It's been too long. So let's go ahead. Let's bring on Adam Johnson here. Welcome to the show, Adam Johnson. This is the portfolio manager and advisor investments and also American Ingenuity strategy. How we doing, AJ?
Hey, doing great, Money Mitch. It's great to be with you. It's been, I don't know, a few months. You're right. It's been too long, but I think we've all been kind of hibernating, just trying to survive. I think the good news is we're coming through this whole thing. I think the 2 E's of earnings and employment matter more than the 2 R's of rates and recession. So it's good to be back. There may be some red on the screen today, but I think the future is a lot more green.
I'll tell you what, Adam, I've been watching your interviews also. It's not like if they're not on here, I don't watch them. So I will get into some of the things that I've been watching you mentioned. Let's talk about the market bottoming out and what are the 9 signals that you use? I've heard you mention these before. And what should we look out for?
Yeah, it's the checklist. I call it the Are We There checklist. And Mitch, I've been able to check about 7 of them. Just to keep it simple, think about stuff like this. The percentage of stocks in the S&P 500 below the 20-day moving average, that's 98%. The percentage of stocks below the 3-month moving average, that's 95%. Anytime you get either one of those percentages above 75, that's a washout. And again, we're at 98 and 95. So check 2 items off that list. You look at the ratio of bears to bulls. Right now, it's about 3 or 3.5 to 1. It actually was as wide as 4 to 1. That was the most negative since 2008. And anytime you get it above 3 to 1, again, that's something else you can check. The number of bulls, the lowest since 1990. Again, that's something else you can check. The volatility index inverted. It's been inverted for months. Again, something we can check. 7 of 9 items on the AJR were there yet checklist. I've been able to check off, Mitch. The 2 I haven't, the VIX, the volatility index, I know it's inverted, but I actually like to see it go above 40, where you get that ultimate sell-off and everyone just says, get me out. And then the other thing, which is related, is the put call ratio. You get that above 1.4. It's gotten to 1.36, which is close. And again, that's just telling you that there's total capitulation. So 7 of my 9 I can check off. The VIX and the put call I can't quite, but again, pretty darn close.
Yeah, it seems like we've been having recent relief rallies. A lot of question on out there if this is one of those. I would like to ask you, how do you feel about today in the bottom put in or not? And of course, what should we watch to see if we do get that bottoming action. Of course, there's the two that you mentioned there that you're keeping an eye out for.
Yep.
But what if we don't get those? Would that still be kind of a mode where you'd be like, well, then I'm not going to go fully in on calling the bottom here?
Well, admittedly, I don't think there's any money to be made in fully calling the bottom. There is money to be made in picking high quality stocks that are down on the lows and owning them over the next year or two. I'm an investor. In fact, if I need to wait 3 or 4 years, I'm happy to do that. I'm not a trader, so I'm not going to try to tell you the bottom's in, there it was. What I will tell you is that I have been buying. I do believe that bottoming is a process, and we are well into that process. If you think, Mitch, about what happened or has happened over the past several months, first it was all the growth stocks, all the Kathy Wood ARK ETF growth stocks that got crushed. Then it was the FANG stocks, starting with Amazon and Facebook, et cetera. Even Google and Apple have gotten hit. Netflix, no need to go into that one. Nvidia, et cetera. And then it started to rotate through to industrials. And then the banks made new 52-week lows. And then if you remember when Target blew up about a month ago, the retailers all got crushed. Bitcoin over the past couple of weeks. So my point is there's been this rolling bottom in the market. And even though in the past, what we've typically seen is everything go down and make a low together, in this particular sell-off, this particular bear market, it's not unfolding that way. It's, as I say, this kind of rolling bear market. So I'm not sure we're necessarily going to get the one crazy day where everything looks horrible. But I will tell you, Mitch, there have been, as you know, a lot of crazy days. And 2 weeks ago, when we were down, 12% over 4 trading sessions, that felt pretty crazy and pretty ugly. I did some buying. I'd rather be buying in here than selling in here. So I can't answer your question. I can't tell you definitively the bottom is in. All I can tell you is what I'm doing, and I'm buying.
Love it, love it. And I agree with you. The bottoming is a process. A lot of people are trying to put it on one particular kind of number indicator. Right. The truth is that you probably won't know that the bottom's in, because that's what it does. It's a bottom. It's a bottoming, right? And it's not about catching that first 1-2% off the bottom. I love how you're mentioning that, Adam, and definitely taking a view of it as an investor. One of the things that I'm kind of keeping on watch is kind of the separation here with growth and value, right? Because one of the things that I can start seeing, and we could pull up ARKK or maybe to take a look at that, but I'm really starting to see a little bit of growth, catching a little bit of that bottoming action. Maybe not taking out the lows that we had a couple of weeks back. What do you see in growth stocks here?
Well, look at the large cap tech companies that have led for so long. And now I'm not necessarily talking about the FANGs. I mean, sure, we could talk about the FANGs, but to just broaden the conversation, you look at a Salesforce.com, ticker CRM, or you look at Square, now called Block, Jack Dorsey's company, ticker SQ, PayPal, PYPL, on and on. I mean, these are some Nvidia, a great example, which I admittedly already mentioned, but just to broaden out the conversation, these are some very exciting, very well-established, very solid companies that are growing both the bottom line and the top line. In some cases, significant double digits. We're talking like 20 to 30% growth. And yet a lot of these stocks are, they're down 50, 60%. So yeah, actually at this point, I would even argue that growth is starting to look like value. And you may even have noticed that Metaverse, otherwise known as Facebook, was just added to the Russell Value Index as of last Friday, trading at 12 times earnings. So there's become a fuzzy line between growth and value at this point. So many growth stocks have just been thrown out that, they now look like value stocks.
Yeah, also to mention, I mean, I know Netflix was also a part of that ad, so it wasn't a company that I would have been looking at for value, but definitely you're mentioning it right on the nail there. Let's go into energy and the pullback, right? Is this just more of a correction, or do you see also opportunities here in energy as we got in this correction in the last 2 weeks?
Sure. Well, I'm a former oil trader, so I love talking about oil. So thanks for teeing me up.
There you go.
But I will also tell you that I would rather own beaten down tech on the lows than broken out oils near their highs. Though, as you point out, they're off the highs. I tend to think that the oil, or that the bud is kind of off the rose. in oil. They've had such a huge move. And here's the other thing. The world is producing as much oil as it possibly can because every barrel of oil is profitable at current prices. Whether you're talking, off the coast of Argentina in 7,000 feet of water, or whether you're talking the oil sands of Canada, all that oil is now profitable. Now, that's not to say you can just flip a switch or suddenly get the rigs on site and start bringing it to the surface. Even if you can do that, you still have to transport it. You need pipelines, you need ships, you need rail cars, et cetera. So it's not just as easy as saying, oh, price is high, let's go. But my point is, the world is adjusting quickly. Look, you probably read over the weekend that President Macron of France is saying, let's bring the Iranian oil back on. The U.S. is using backdoor channels to actually speak with Hugo Chavez in Venezuela. Amazing, right? The U.S. would rather do a deal with a dictator in South America than our own exploration and production companies here in the U.S. That's because the administration doesn't want them drilling on federal land. But my point is, there's a lot of marginal oil that's starting to come onto the market. And we haven't completely made up for the loss of the Russian barrels that were being exported. That'd be somewhere between 5 and 6 million barrels, but we've got about halfway there. So there's a lot of oil that's starting to come on. I think more oil will come on. And if there's any let up in the war between Russia and Ukraine, I think you could probably see oil, and I'm just pulling this number, admittedly, it's not an exact science number, but my guess is you probably take $20 off the price of oil just because you're taking the war premium down. So for all those reasons, I would not be a buyer of oil stocks at this point, Mitch.
Yeah, it sounds like you agree that the opportunity has come and probably passed. Maybe there's some gains there to be made, but definitely the opportunity has come and passed. Let's take a look here at the overall economy. Do you see kind of a strong economy? I know that when we go back to kind of Powell's comments, he had stated that he saw no slowdown in the economy. What do you see out there, Adam?
Well, I'm not sure you can necessarily say there's no slowdown. I mean, just intuitively, you would expect that the housing activity would back off as rates go up. And I know JP Morgan just laid off a few hundred people in their mortgage servicing department last year, or mortgage originations. But I will tell you, Mitch, that I think we've gotten way too negative. I think the two E's of earnings and employment ultimately matter more than the two R's of rates and recession. At the moment, or I should say over the past couple of months, all we've been able to focus on are rates and recession. We have let that narrative completely overwhelm the positive narrative of earnings and employment. And that's why I say, ultimately, I think the two E's matter more than the two R's. We're not quite there yet. We're starting to see glimmers of it, but I think people have gotten way too negative. I respect Mr. Powell for being as positive as he is. I've been very positive too, and admittedly, some egg on my face. But just consider the fact that over the past 2 weeks, according to the TSA, there have been 2.4 million travelers through U.S. airports each day. That's back where we were at the height of COVID, when not only was it leisure travel that we were seeing, that was also accounting for business travel. And right now, business travel, according to Delta, is a fraction of what it was, only about 30%. In other words, we're at 2.4 million passengers per day just because you, me, and everybody else wants to go out there. That's powerful. I think consumers are in a very good place and they're out there spending money. So I'm bullish on the economy, Mitch.
Truly interesting there. Definitely something to keep on watch. And I like how you mentioned there the separation between consumers and business travel. So good numbers to keep an eye out. Now, where can investors, start looking for maybe some plays? I myself, and I'm also in the camp that, you can't stay out of the market for too long. You always got to be looking to start dipping your toes.
Yeah.
Where do you see opportunities out there, Adam?
Yeah, time in the market, not timing the markets, right? So I think you and I agree on that. Normalization. There's some wonderful, I just mentioned air travel. I mean, look at Delta Airlines. I know some of the headlines have been kind of unattractive over the past weekend because Delta pilots were protesting, saying they had kind of lost faith in management's ability to run the business in a quote unquote responsible manner. What they're really getting at is that Delta and all the airlines had to furlough pilots, and they basically parked airplanes in the desert, where they don't rust. And demand has come back so strong that they're bringing planes back and pilots back, but not fast enough. And so some of the pilots are being overworked, and that's why they've been protesting. But that particular detail aside, I think Delta is a very exciting company to own for normalization, getting back to normal. It's trading, call it a 6 PE. They're back to making money again. People are traveling. I think that's exciting. Wynn Resorts, which is also benefiting from the reopening that we're starting to see in China. 2/3 of their money comes from Macau, the casinos off the coast of Hong Kong. So Wynn Resorts is something that I think is interesting. Expedia, just booking travel reservations. United Rentals, trading at 6 or 7 times earnings, the largest renter of industrial equipment. Industrial America has taken some heat, but look at durable goods and capital goods orders this morning, both better than expected. Factories are operating close to capacity. They need to rent that equipment. That's United Rentals. So I think there's some normalization plays out there, both travel and industrial.
Definitely. I'll do a little bonus action. You guys first smash up that like if you guys to get a little bonus here. I'll throw a bonus question. How do you feel about emerging markets like China plays that we're starting to see come back a little bit with these tech names? How do you see it out there, Adam? Is these opportunities to maybe catch an emerging market move before ours catch a bottom?
Well, my whole thing, Mitch, is American ingenuity, right? The people and companies driving the world forward based
100%.
here in the U.S. So I'm not going to be able to go out and wave another flag, but I will tell you that as the world normalizes, that's a powerful tide that will lift a lot of boats from emerging markets to even beleaguered Europe and beleaguered England. Again, I want to focus on the U.S. That's all I do. I don't own companies outside the U.S., but we've gotten so negative, far too negative, that as the U.S. economy comes out of this hole, that will help other economies around the world get out of the hole, normalizing supply chains. I won't touch China. For me, that's a no-go zone, but there's certainly plenty of people who are talking about the fact that China Dragon Index is way off the lows over the past 2 weeks.
Something to definitely keep on watching. I'll throw it to the audience. Definitely, guys, give Adam Johnson a follow. AJ Insights. You guys can check out all the work that he does. Thank you for coming on, Adam Johnson, and we'll definitely have you back.
Okay, sounds good, Mitch. Thank you.
All right, guys, that's going to do it for us today on Stock Market Movers. But like always, this is the show where we get to the headlines and the expert opinions that you guys need to stay in the informational edge. Do me the favor, hit the thumbs on up. Hit the comments after. Let me know what you guys thought about today's show. I did see some comments on Venezuela and what's going on in Iran and the oil situation. If you guys got some comments, you just want to go ahead and start a discussion, throw it up in the comments after. I'll definitely see it, and maybe we take it towards a deeper dive right here on Stock Market Movers. Like always, guys, stay with us all week as we get to 2 expert opinions and the headlines you guys need to stay in the informational edge. All this in 1 hour. Coming up next, you guys got Moon or Bust, talking about true inflation and doing an NYC NFT recap. So if you guys wanted to check that out, definitely come on over, learn some cryptocurrency, and get on over with the Moon or Bust boys. I'll get on out of here. Until next time, guys, smash the like and let's keep it going right here on Benzinga. I'll see you guys in a little bit on At the Close, and that's, of course, at 3:30.